Hey guys, welcome back to another episode of Ryan Makes Sense. Today, let's talk about some growth stocks to watch as we currently watch the banking world burn. Unfortunately, we are seeing the banks currently go through a crisis. By the time you watch this video, I'm sure we'll have seen a couple more fall. But what are some good small cap stocks we can watch now to potentially take advantage of when these stocks reach consolidation and support level? I'll share a handful of ones that I personally own and like, and then we're going to perform a search and find small cap growth stocks that I have no influence of, no bias, and look through a couple of those. So with that, let's go ahead and jump in. All right, if you've been following my channel, you know that I really like the ticker symbol AEY, Addvantage Technologies. So we're gonna look at Addvantage Technologies, Digihost, Playstudios. I think those are the major small caps that I'm watching right now. I'm trading in and out on my Robinhood Daily Challenge. I do post that immediately on my YouTube community page, so you can check that out. And again, if you would consider subscribing and liking this video. I like how this ad is a post-pregnancy ad. I hope we're not pregnant. So AEY, let me just shrink my head here so you guys can see better. Okay, so this is not really an identifiable pattern on the daily chart. What I could kind of see is a left shoulder here, head right here, and then a right shoulder like this. But if we look at the weekly chart, again, not really an identifiable pattern. Let me zoom out just a hair. There we go. Not really an identifiable pattern here either. And then if we go to the monthly, this looks like a long descending triangle where it had a breakout right here and then it came back within the triangle. So I mean, nothing really too crazy in terms of patterns, but let's look at the most important thing for this company, which is going to be its financial data points. I'll try to keep this one brief because I do talk about this one quite a bit. So if we just look at sales plus income, 96.2 plus, which is actually going to be minus 1.10, we're at 95. And if we divide that by the total shares float, 8.5 million, we get around $11 price target. We could remove the debt. I mean, let's even do that. 96.2 million divided by 1.10 million equals. Oh, I'm sorry. I should have did minus 96.2 minus 1.1. And if you're asking why I'm doing shorthand for millions, it's because all of these numbers are notated in the millions. So they're all the same denomination. So I can use shorthand. So that gives us 90, I did it twice, dang it. I'm just on the struggle bus, 96.2 minus 1.1. Okay, 95.1 million, and let's minus the debt, balance sheet, total debt, 4.06 million, so minus 4.06 million, so that brings us to 91. And then if we remove, well, I guess we can't really remove liabilities. So let's keep that as it is, and then let's divide this by our 8.5. So a share price of around $10. So again, I really like this one because their sales per quarter exceeds their market cap, which is freaking nuts. Institutions have been adding a little bit. Actually, I think they've been selling a little bit of Addvantage Technologies. Fintel, and then we're going to go to AEY. So FinViz shows 3.8, and Fintel shows 6%. Almost a double. Insiders almost doubled up. So that's amazing. And again, just to show you guys another reason why I like this company. Over the past 5 years, their sales have been positive and earnings per share have been positive. And I do want to just put it out in the room that we went through the great lockdown. So companies that are still positive, through the last 5 years, the first thing that comes to mind is resilience. So like this company has $11 price target. I'm looking for much less, but if the company continues to execute strongly and, becomes a key player, I'm going to hold my position. I currently own 32,000 shares of AEY in my personal account, and then I own 80 shares in my Robinhood Challenge account. The next one we want to look at is Digihost. Now, I did own this in my Robinhood Challenge, but I actually sold it because, can you see? My head's in the way. Okay, so I sold it because, number one, I want to take profits, and you'll never go broke taking profits. And number two, we did hit a triple top right here. It hit 165 3 times, and now the next support is at 129, which is where I purchased the shares. So I did sell for a 10% gain. I will get back in if the price gets more attractive. But let me show you how this company looks in terms of a fair share price. This company is a cryptocurrency mining company. Yes, it's headquartered in Toronto, Canada. So really quickly, let's just do some math. So we're going to do sales plus income, and the incomes here is actually positive, which kind of sets this one apart from the other Bitcoin mining stocks. 38.5 plus 19, $57 million. Look at this PE. The PE is a 2. That means it's severely undervalued. So we have the total sales plus income, and now we're going to divide it by the shares float. 22.94. So this is around a $2.50 stock, in my opinion. And what's crazy, we don't have it here. And I just want to know, I don't believe they're profitable, but if you do want to see companies that are outside the US, their balance sheets on Finviz, you actually have to go to their website. So just based on the sales, income, shares available, and the little minuscule debt, I bought this one on the spot a couple weeks ago, and I made a quick profit. So I'm going to wait for a 129 test and potentially get back in. Yeah, I'm a huge believer in cryptocurrency. So I do think owning a healthy crypto mining stock is a good idea. I like this one. There are several out there. I really also like CleanSpark, and I'm rooting for Stronghold Digital Mining. I only say that because their CEO is very committed. The CEO and an executive have an LLC where they put $36 million into the company. And then the CEO purchased another $1 million worth of shares. So ticker symbol on that is SDIG, and they have earnings next week. So, pulling for them. Hope they kill it. I think they will kill it. So next one we're going to look at is ticker symbol MYPS. Now, this one I do own 60,000 shares of collectively in all my accounts. I really like this one because I think this one is a disruptor in the gaming space. So this company acts as a casino type app where you can play a bunch of different casino style games, but the rewards you earn are real life and very casino like. So you get comped rooms, comped drinks, comped entertainment, comped food, comped travel experiences. You could go on a helicopter excursion. You can go get a massage. So many different things. So you play for free, comfort of your own home on the couch, sipping your Pinot Grigio or your Sangria or your Moscow Mule, whatever you drink, if you drink, and playing the slots right on your phone for free and earning real life rewards. So I think Wynn owns 17% stake, 12% stake. I don't really remember. Andrew Pascal, the CEO, his uncle is Steve Wynn. And if you know Andrew's working history, he's a hustler. He's very ambitious. He's always kind of gone his own way. Steve Wynn is his uncle, like I said, and Steve Wynn has always wanted to keep him under his wing and have him manage the day-to-day of the businesses. I believe twice Andrew worked under Steve Wynn, and both times Andrew left to start companies, successful companies. So this is Andrew's latest venture, and I have to say he's doing a pretty good job, honestly. They recently, well, not recently, but they acquired the rights to Tetris. They purchased Brainium. They have they have a blockchain division. I forget, Web Blocks. I think. And their revenue for 2023, I think, is going to be around 300 million. So baby steps. I think this company is going to be just an absolute monster in the future. I'm trying to add as much as possible while it is cheap. So yeah, let's look at the price of this and see what the fair value is. Let's do sales income, and let's add the cash to this because cash is significant. So 290 million 0.3, so minus 17 million, 17.8. So 272 million, and let's add their cash on hand. 134 million plus 134. $406 million divided by the shares float, which is the shares available to the public, 96.05. So a $4 stock price is reasonable here. Currently it's 366. If we take out 406.5 and we divide it by the shares outstanding, so the total shares for the whole company available, 82. It does put us around $3.10. I do think the stock is going to get to under $3 actually, just for a quick amount of time. So just a heads up there. I've been posting charts on social media, social media stock twits. You can find it there. I also have a full dedicated video to MYPS as well, where I go over everything about the company. Excuse me, the CEO. Future, not projections, but future, what the future could look like for the company. Past controversies with CEO and the company. It's a really good video. I spent a lot of time on it. So these are the three companies I like. Do your own research on these, of course. Let's switch and find companies through the scanning process on FinViz. All right, so we are on finviz.com, and I went to the screener portion. And so we are going to look for small cap companies here. So we're going to do market cap, and we're going to do small. There is another. Yeah, so we want to look over 300 million, under 2 billion. And debt in these current environments with the rates going up is not that good. So let's look for companies with little debt. So long-term debt to equity, we want it to be under 1. And debt to equity, we want to be under 1. We have 1,070 stocks currently. We want a growth stock. So we want gross margins to be over 25%. Whoops, I put under. Let's go over 25%. There we go. All right. We brought it down to 491. And we also, we want the quick ratio to be over 0.5. I would prefer over 1. Let's do over 1. That means they have adequate cash. So 490 went down to 363. Let's now look at EPS growth this year. Let's do positive, and then EPS growth next year to be positive as well. We want companies that are guiding to be positive. Now we're down to 145 stocks. Awesome. Let's see what else we have here. I do want to do institutional transit. I've been seeing so many institutional buys. It's crazy, but we have to remember FinViz is a little laggy and slow when they go to update their data points. So it's still showing old data, which is showing a lot of institutional selling. So let's also look at sales growth over the last 5 years. Let's look at positive. And let's look at EPS growth over the past 5 years, also positive. So that means these companies over the last 5 years have had a history of being positive. So we're down to 71. Still not enough, or still too many for me, honestly. Let's look at shares float. So this float, we're going to do under 100 million. That should bring us to the 40, 60s. And let's look at, do we want to look at stocks that are a little beat up? No. Let's look at institutional ownership. We can't just choose positive. Let's look at... We don't want any dividends, so we're going to go to none here. That's probably not going to... That took about 23 away. Okay, so we're down to 40 stocks, which is 2 pages. Let's bring it down just a little bit more. Options / short. We want it to be optionable and shortable. We're down to 38. Okay, almost there. Let's also look at only stocks in the USA. But there's some good ones. I mean, that brought us down only 5. Okay, we'll keep that. Let's also... I want to have ownership being like something else other than the percentages. Let's see. I guess we can... No. Not overbought, so less than 50. Let's look at price. Let's do under $50. That got rid of 5 as well. What about if we look at stocks under $40? Okay, we have 25 stocks. Let's do one. Let's just look at stocks under $20. How about that? Okay, we're left with 10. Let's check these out together. Okay, so we've got 10 different stocks loading. A couple of these I already know. I'm like, why is this on here? But let's see. Okay. So ACM Research. This is, decent looking company. It looks like it is the future. The forward PE makes this stock look undervalued. So if we do the math here, we have 388.8 million plus 39.3 million, 428 million, and then we're going to divide that by the shares float of 44.62. So around $9.59, and the stock's right now at $11. So it's a little, excuse me. It's a little overpriced in my opinion, but again, considering the future and the growth, it's going to be underpriced. And if we look at the chart as a whole, I'm guessing it's, it's doing a little bounce. It did a bounce off of the $5 and it's gone up 100%. So good for those of you guys who got in on this one. Would I consider this one? Maybe. I mean, the revenue looks good. The net income is growing. Balance sheet of 247 million, cash, total assets 1.2 bill, liabilities 560 million. I mean, this company looks pretty good actually. I like the stock really. They're profitable. I like this stock, man. Institutions own 68%, and if we look at an updated version of that, I'm gonna guess it's over 68%. No, it's down to 59. Wow, we got someone taking cash off the table. Institutional ownership went down here. Rare. Okay. I still like the stock. It's not something that's like making me want to add it to a watch list or anything, but I mean, I don't see anything wrong with this stock, really. Um, if we're looking at like long-term supports, I think it's pretty close to long-term support. I like this one. Um, so I'll just keep it open for now so we can have a tally of which ones we like. This is Diagnostics and Research. They make 29 million, but they lose 86 million. So this is gross, and we're going to just get out of there. CISO, Environmental Corp. So looking at this one, it definitely looks priced right. So they have 422 million and 422.6 plus 17.4. 440, and then we're dividing that by 28.7, which is the shares available to the public. So $15. Stock is currently 13. This looks good. Really. It looks like it's going back to try to test $18, $19. I like this one. Institutions own 67%. Let's see if Fintel is showing more because it normally is. Now they have 102%. Oh, wait, I typed in the wrong one. CECO. How did I get that? No, it's showing PRD. That's so weird. Okay, I don't know what Finvid or Fintel is doing. It's showing a different stock that we're typing in, which I don't normally see this. So yeah, we want CECO. Oh, it's CECE on Fintel. And they're not showing us the ownership percentage, which is kind of annoying. But if we look at this chart to the right, we can see it's normal institutional ownership, nothing out of the ordinary. So yeah, I like CECO. I would keep it up. I'm just gonna keep it up for tally purposes. CTLP, we have Cantaloupe. That's never heard of this. It is currently $5.22 and it looks overvalued. So let's look at the sales, 227.4 minus 9.8 million. They make 227, but they lose 9.8, and there's 65 million shares available. So we're going to divide by 65.33 mil. So the stock should be priced around $3.30. It did get down to 268 though. So I think that would have been a steal of a deal if you could have got in there. Yeah, I mean, this company, earnings per share this year, 76%, next year, 900%. EPS over the past 5 years, strong. Sales over the past 5 years, strong. I mean, this is a $5 stock. I don't know why I would not want to own this. Good buys here. The COO bought 203,000 at $4.52. Hudson Executive Capital owns 12 million shares and they bought more. Just crazy. Ooh, they're not net income positive. Oh yeah, that's right. They lose 9.9. So they're not profitable, I don't think. They have 68 million in cash, which is good. Total assets 255 million. Total liabilities 95 million. So about 2x assets dwarf liabilities, pretty much. Profit is almost profitable. So I like this one. I like this one. We're gonna keep this open. CVEO, they make 697 million. They have 2 million in income. This looks reasonably priced, I think. 697.1 million in sales plus 2.2 million in income. Looks like they barely just got profitable. Divided by the 12.61 million shares outstanding, it's a $55 stock. Target price is $35. What happened here? It was $36. What type of business services? Minus 21%. So they had a bad quarter. Revenues beat expectations, but the earnings per share lag. Earnings per share lagged, but over the past 5 years, earnings per share has been 15%. So make with that what you will. Let's see what institutions are doing. It says institutions own 75%. CVEO is going to be over 75%. I'm going to say yes. %. Yep, right here. So this company this looks good as well. I'll keep this one open. Okay, GIII. Wow, this looks very undervalued or mispriced. Wow, the price to earnings is 3.9 with a forward P of 4.9. I mean, this is extremely undervalued. How undervalued? Let's find out. So they make, I have to do this one longhand because this is billions and millions. So they make, and we're going to remove debt from this as well, just to get a holistic picture of the company. So 3.12 billion is going to be 3120000. So that is million billion. Okay, and then we're going to add 176,500,000. Yep. Okay, so we have 3.29 billion, and let's remove the debt. Total debt, 619 million US dollars. Okay, so we're going to do minus 619. Yes. Okay, so we're at 2.6 billion. And we're going to divide it by 41 million. Divide by 41,260,000. So fair share price around $64. They have a target price of 16. Let's take a peek at what this is. The chart looks like. It was over $60 before. Looks like a head and shoulders, left shoulder, head, right shoulder. It looks like we can expect the price. Oh, wow. We had a falling star here. Let me move my key. So right here, falling star, and then it fell up, and then we have a rising star, I think. So this basically identifies a downtrend, which is crazy. So it had one huge day, and then it just kind of popped up and then came back down. So what type of apparel is this? I guess we could go down and read, but let's just look at the site. I'm not a huge fan of apparel companies. I do like Mercado Libre. I own that one. Oh, so this is like a clothing conglomerate. They have Nautica. Let's see what else. All brands. Okay, so they have Nautica, Calvin Klein, Tommy Hilfiger, DKNY, bunch I don't know of, Bass Outdoor, Andrew Mark, Dockers, Guess, Levi's, Margaritaville. Okay. Well, that is a nice mix, honestly. I kind of like this. I'm going to keep it up. Let's see what the institutional ownership is. GIII. Fintel shows 98% ownership and Finviz shows 93%. So institutions have been buying. I like this. I guess I would consider slowly buying the dip on this one. Just like start with like $50 and maybe do $5 a week. Fractional shares. Yeah. Or if you're doing 500, whatever I would do that. Sorry, I'm not recommending anyone to do that. I would do that. If I was going to buy this, I would do that. Do your own research on this. I have no idea if the companies they own are even profitable or if there's any losers in that group. So again, I like this company. We're going to keep it open. I do like this company as well. I remember this company. The price to earnings is 3.56. That is devastation. Let's just go ahead and do some quick math here. This is so 325 million 0.2 plus 103.8 in income. Let's remove the debt just for posterity. They have 5 million cash. Who cares? Total debt 43 million. So let's remove that. Minus 43.23. Okay. And now we're going to take this and divide it by the shares available, which is 37.3. So a $10 stock. It's trading at $7. I like this. And the earnings per share this year is going to be 667%. Next year, 16%. Over the past 5 years, and the sales past 5 years have been solid. They're hugely profitable. HDSN. I'm going to say institutions have been buying. This is at 73%, and FinViz has them at 71. So, yep, insiders have been buying. I like this one as well. We're going to keep it open. Ticker symbol PLAB. Let's look here. Wow, they make a lot of money. They have little to no debt. Whoa, this kind of sounds too good to be true. Okay, well, let's do the math. 845.8 million plus 109.7 million in income. There's little to no debt, which I'm circling right here, so I'm not even going to go down. They have cash. Should I add the cash? I'll add the cash. They have 319 million in cash. That's huge. Plus 319.68. So they have 1,287,000. So I have to break this out. So 1.275 billion. 1.275 billion. Divided by shares float of 59.84 million. 84. So the share price of $21.30. Target price of analysts is $24. The price earnings is not as steep as the other ones. So I really, really, really like this company. I am going to keep this one open. SATS, EchoStar. Wow, they make $2 billion. Wow. They have no debt. Oh, nope, they have a little bit of long-term debt. So they must have just purchased something. So 2 billion plus 177 million. So this is a heavily undervalued stock. So let's just do this together. 2 billion plus 177 point. No, I have to type it out. 7710. Yep. And there's little to no debt. I'm not even going to look. Quick ratio. Do I want to look at the cash? Let's just look at the cash. Are they burning cash? Are they accumulating cash? What are they doing? They're accumulating cash. Total assets, 6.1 bill. Total liabilities, 2.6 bill. Pretty good ratio there. Oh yeah, let's add the cash. 704 million. Jeez Louise. Plus 704,540,000. Wow. Okay, and then we're going to divide it by 33,120,000. So share price of $87, currently $17. I really like this one. Institutions own 93%. I'm going to say, oh, it's showing a lot less. 44%. That's a big drop, right? Is that a big drop? Yeah, that's huge. What happened? Vanguard decreased, BlackRock decreased. No, BlackRock kept the same. That's a big difference. This is showing 44%. I guess I would wait on this one. I still like it a lot. I would probably wait for this one just to see what's going on there. But still really undervalued in my opinion. Next one is Zumiez. So again, Apparel, not a big fan, but they look good. They have no debt. So let's just see what this looks like. So they have 958.4 million sales plus 21 million in revenue. Divided by shares available of 15.67. So around a $62 stock. It's trading at 17. What I find fishy about this is their income is exactly 21 million and their quick ratio is exactly 1. How can they play that so closely to the T? Why am I feeling sketched out about Zumiez? feel sketched out about Zumiez, which I don't think I should. The chief legal officer sold half of it, more than half of his shares. No, he sold almost half of his shares. But he also that was for an option, so never mind. CFO did not, or C whatever. C chief legal officer did not. So I'm sketched out about Zumiez. Let's look at the larger pattern here. Yeah. I feel like this is going to come down and needs to accumulate more, kind of like a long flat U-shaped recovery, like longer than this right here. I'm going to remove this one, even though it looks healthy. Let's see what institutions have been doing. So institutions own 90%. According to Pintel, I'm guessing they probably own more. 121. So they bought more, but yeah, I mean, even over here, let me show you guys. Even right here, this, they have a little, the trend is rising upwards. So yeah, I don't know. This one's good, but it's Zumiez, right? They just sell like skater clothes. Do people even skate anymore? I don't know. Okay, they sell Converse, Nike. So they're kind of like a Foot Locker, Vans. I mean, these are shoes. I see shoe brands. I don't see any superstars on their front page. I mean, they got it all. This and GIII. Maybe if I was going to go into, apparel, I would do maybe split. So if I'm going to do like $100 worth of apparel, maybe do 70% or 60% to GIII and the rest to Zumiez. And dollar cost average, don't just buy all at once. So that wraps this up. I showed you guys how to find some good small cap growth stocks. Definitely feel free to tweak the parameters. Maybe you want companies with some debt. Maybe you want companies with no debt. Maybe you want to see companies where institutions and insiders are buying. Maybe you want companies that have dividends. I have no idea what you want. But yeah, this is my list. I'm going to keep these on the back burner. I'm going to add them to a watch list. And yeah, I appreciate you guys for hanging on. Or hanging out with me. If you made it this far, please consider subscribing and hitting the like button. And I'll talk to you soon.